Hey guys, welcome to Investors Chit Chat. Over the past few years, I had been investing and trading in Australian share market, but earlier this year, all my long positions are closed as they hit their stop loss. The course of the Australian share market has changed overnight. One day it was a bull market, and from next day on, it turned into a bear market. Before that, I had a predefined investing strategy that was working quite profitably. As the conditions of the market have changed, I have changed my trading strategy as well. Now, when I look at the profits, I feel glad that I have quickly adapted to the market conditions and changed my strategy. So, in this video, I will explain to you step by step as to how I have changed my strategy and also how I have benefited from the current market conditions. So, let's get started. Earlier this year, ASX 200 was making all time highs. It has even crossed the 2008 high. But in late Feb this year, market has went into a panic mode. In a span of 1 month, it has dropped 38.5%, the quickest drop that has happened in 1 month time, turning bull market into a bear market. So as I was mentioning earlier, all my long position got closed on this candle here. As the market has dropped for a few days and then it started consolidating sideways for 4 days, I thought the market will now recover. And I have placed my buy orders above this candle, but they never got executed. Considering the pandemic and the whole situation, I know that I'm looking at something that I have not experienced before. Also, I have decided to take advantage of this current situation. From knowledge point, basically, I am a technical trader and I don't believe in fundamentals. As I feel, no matter what the company fundamentals are, they should always reflect in the price, and you should be able to see it on the chart. I know it's a different school of thought, technical versus fundamental. Neither of them are wrong, neither of them are right. It's just what fits you. Having said that, at this point of time in February, I felt I need to actually look at some of the fundamentals of the shares to be able to buy them. So, if you're not an expert like me in fundamentals, click the subscribe button and I will show you how I have overcome this blockage. So, what you have on the screen is the selection criteria that I have come up for the current market conditions. In order to consider a stock, firstly, the stock should have been trending before 21st of February. This tells me that there has been an underlying strength in the stock, and this is the only technical criteria that I have considered. I have relied heavily on fundamental analysis because for a company to survive this crisis, it has to have strong earnings and low debt. And also, it should be in a sector that has little or no impact, and the future prospect should be recoverable. When I was doing my research, I have come across shares like Webjet and Flight Center, but I was not sure on their recoverability. As I was mentioning earlier, I personally don't have much of an experience in fundamental analysis. I understand the concept and also understand various parameters that you can use in fundamental analysis. But for me, the problem has always been finding the data and using that data to screen through the market. At least as part of my research, I have not found a reliable source of data that you can use to screen the markets. And I never had enough time to go through each stock and study their financial reports. So there I was finding the need to understand the fundamentals of the company. Because for a company to be able to survive this pandemic situation, it has to have a strong balance sheet. So to solve this problem, I had to outsource it. I have signed up to services that offer recommendations based on fundamental analysis like Intelligent Investor, Eureka Report, and Morningstar. I have screened through these recommendations and reports. For example, if you look at Intelligent Investor, they provide a recommendation for buy price of a share and hold price and sell price. Not only that, they provide a synopsis as to how much debt the company is currently having. So I would screen through the debt company is holding to filter further. I know most of the companies will raise capital, but the current debt companies have will make or break them this year. There is a lot of uncertainty in the current market, and also there will be a lot of uncertainty going forward. Buying shares right now means that I might have to hold these positions for extended period of time. And I also know that when it recovers, the profit will be in double digit. And the last factor I have considered is the distribution of these purchases across different sectors. There are some sectors that will be heavily impacted because of the pandemic, and there are some sectors like technology which have little or no impact. So even after the above criteria, I have ended up with too many choices. And the next step I would do is calculate the amount of discount that I am getting compared to the value of stock price itself. For instance, any of the shares that intelligent investor has recommended based on their capital earnings etc. I would compare that with the current stock trading price. So that tells me the discounted price the stock is trading at. For me, it was an indicator to know how cheap the stock is compared to its value. And lastly, I would also look at the fall percentage from the peak of Feb this year. As part of technical analysis, I know that the price would retrace at least 50% before it continues to further lose its value. As you can see on the screen here, Sydney Airport was trading at a peak value of $9.10 and on the day of consideration fallen down to a value of $5, giving you a 44% drop in the price. So this gives me a confidence that if it retraces at least 30 to 50%, I will be able to make a decent profit. So based on all the above criteria, I have prepared a watch list of shares that I should consider. Once I had the list, I entered based on technical analysis of a daily chart. I don't know if the market will have a V-shaped recovery or W-shaped recovery. I still don't know how the recovery will be. I have split my capital into two lots. The idea is to invest the first lot now and then invest the second lot when there is a second pullback. As you can see on the chart here for JHX, I have placed a buy order above the high of this candle as I saw consolidation. So looking back, I feel glad that I have adapted my investment strategy. I am heavily biased towards technical analysis as I always feel that whatever is the company's fundamentals, it should reflect in the price. In past, I used to sit on the sidelines if there is market uncertainty and if my strategy using technical analysis is not working anymore. Psychologically, most of us prefer safety to risk taking. I think we should embrace the risk and uncertainty in the market. At the end of the day, that is the nature of the market. So, if you are sitting on the sidelines due to uncertainty in the market, identify your risk comfort zone and come up with a strategy to embrace the risk. That's all for this video. And if you want more such videos on finance and investing, please subscribe to this channel.